Sushant Bhansali, CEO of the company, is joining us today. They have recently announced a strategy for the HNI clients, which appears to give an impression that the portfolios and certain select companies can go 10x in the next 10 years. Uh, Sushant, afternoon. When I tweeted about it, it clearly gives some food for the thought for market participants and basically kind of people who are looking at the real long term, 8-10 years. And a lot of our friends on the Twitter wanted me to, really bring you on the show and talk to you about the hypothesis you are actually making, because to some it appears a bit on the aggressive side as far as the growth of the country is concerned. But I would toss it over to you to explain us why it appears conceivable and that you've gone ahead and formulated this strategy.
Sure. Thanks, Ajay, for having me here at your show. And glad to see your tweet about our portfolio. Has definitely created a buzz about it in the marketplace. Thanks so much for that. So, Ajay, the portfolio, the way we call it is 10-10, right? While it sounds like 10x, but it's 10-10. And what we are saying is that as India's economy goes towards $10 trillion, right, look at companies which can grow their earnings by 10 times, right? And while everybody believes that what we are saying is 10x in 10 years, but essentially our belief is that India's economy, which is currently close to $3 trillion, should go to $10 trillion in a matter of somewhere between 10 to 15 years, ideally 12 to 13 years, looking at the past track record of the Indian economy and the way we have seen it other countries. Right. So it sounds quite big a number, $10 trillion. But if you look at from a per capita GDP perspective, India is right now in the top 5, 6 economies globally in terms of size. But on a per capita basis, if you look at it, India is way, way, way back, right? They are in like 120 or 150 numbers if you take whether on PPP basis or on actual basis. So there's a lot of ground to cover. And our belief is that the structural reforms which have taken place in this country in last few years, and we have a solid base and foundation created, which if we don't do self goals, can create a great moment. Probably the next decade or 2 decades can be in India decade and golden times for us. If you look at how Japan did it in between 60s and 90s, Japan GDP grew more than 70 times, right? China's GDP grew more than 40 times between 90s and 2020, right? So it's not that what we are saying is something which others have not done. It's just we believe that this is India's time. And looking at that, if that happens, then probably there are companies in this country which can deliver this growth of growing their earnings by 10 times. Now, the time period can be 10 years, 12 years, 13 years for it's anybody's guess. Each company will have its own trajectory. And it's not that it has not happened in the past. There are companies in India who have delivered 10x earning growth in 12, 13 years. If you look at 2000 and then look at 2013, there are at least 140 companies amongst the top 1,000 listed companies in January 2001, which delivered a 10x earning growth in 13 years. So it has been done in the past, although you have to be careful in choosing the companies. But if done well, and if even if you are able to crack 3 or 4 such companies in a 10 stock portfolio, right, the job is well done. So
Right.
that's the whole thesis behind the strategy.
Fair point. What are the some of the risks to your hypothesis? Because growth is a moving average after all, and the way inflation is coming up globally, some other issues which could put a spanner in the works for a bit. I'm not questioning that we cannot achieve that number. It may get delayed by a year or two, but there would definitely be some factors which investors need to keep in mind, which could prolong the hypothesis a bit.
Sure. So I would say the biggest two risks in our mind when we look at a 10 or 15-year time frame, right? The short-term noises of, I would say, inflationary pressures or the rates going here and there. I think they are more short-term oriented, which can impact your earnings for a year or two, right? But with a decade or a 2-decade journey, if you look at the biggest risk which comes to our mind is geopolitical risk, right? And then there is an imminent risk of a global sort of asset reset. So these are two large risks in our mind if you take a 10, 20-year view of things.
Let's go deeper. Which are the areas to your mind when you speak to companies across sectors, where you see there is possibility, there is industry tailwind, plus there are specific issues which companies are doing so well, managing the capital, going to market in a deeper penetrated manner across the country. Give us some more meat, or perhaps where mispricing, there is already a attractive sector developed, but people are mispricing such names right now, and there is a lot of stuff which is happening inside on those companies. If you could talk about a little more in detail.
Sure. So there are few sectors which I would say have been doing quite great in last few years or decades, and probably they have a great runway ahead. So sectors like affordable housing, right? The average Indian outside the metros or outside the top 20, 30 cities, they still have to, I would say, if they want to construct their houses, etc., either they go to PSU banks or they go to money lenders, right? The unorganized sector is still quite large, and gradually it is picking up. There are many affordable housing companies which have come out in last few years and who has tried to address this market need. We believe we are quite gung-ho on affordable housing as a theme. Alongside that, consumer discretionary, especially on the low ticket size, say let's say between somewhere to 500 to 2,000 rupees ticket size, consumer discretionary. That again, I would say has probably a great run for next 10, 20 years, because as the per capita GDP income increases from close to $2,000 now to say about 5, 7,000 as it becomes a $10 trillion economy. That's the time lot of discretionary spend will happen. And right now, this is limited to top 10, 20, 30 cities, right? The lower category item probably are in the top 50, 60 cities. But India is a large country, right? Right now, the distribution network is not there. What GST has done, what technology has done in India has brought lots of efficiencies. And I believe that will play a long way in the next 10, 20 years of uh, making these discretionary players available across all the country, and that's why the penetration will just boom in various categories.
Specifics, then Awas Financiers is a company which is doing phenomenal work in that direction. For example, we are not discussing buy sell ideas here, Sushant, but the kind of opportunity which lies ahead in companies such as these. Have you studied some of these names, or perhaps this one?
Yeah, sure. So Awas has been part of our portfolio. Our team has done lots of work on Awas, and we have been quite gung-ho on this name. It has been in one of our other portfolios for almost now 3 years and more. Right, we have been closely tracking the company. The team believes that Awas has a great roadway ahead for next 10, 20 years. They've been steadily growing their book, and their book size I think now is close to 10,000 odd crores. And if you look at the large lenders like HDFC Limited, right, their advances book is in lakhs of crores, or let's say SBI on their own housing finance portfolio. So the sector is quite large. There are not too many affordable housing companies in this country, and we have seen that as the cycle turns, we saw what happened when the LFS or the DHFL crisis happened. Right, a lot of these NBFCs faced problems. But there were few like Awas who stood tall in those adversities, and that's, I would say, is what set apart companies like Awas from others. You need to have a good sector, but also you need to be aware of the risk profile of the sector, and your balance sheet has to be strong.
Companies which have done initial groundwork, but now perhaps could be readying for the big leap of joining the really large giants in that space. Loris, for example, has done some pretty work, but right now the entire street has gone very in a denial mode on that company, and the stock corrected a whole lot. But talk to us about what are the high level chemistry stuff which is happening inside the company.
Yeah. So the company, I would say it is quite a differentiated sort of company, right? Our analysts who look at this company, they are quite gung-ho in the sense that they try to build the business model quite differently. When they started the company, that time itself, they had a huge R&D focus. So they had hundreds of scientists on their payroll right since inception. So that shows the credibility, and I would say the vision of the owners of the company, that they thought that let's do something more on R&D and build new products. They started as an API player, but then got into ARV, so they are doing both API and formulations. Right, as we see, probably who knows, in 10 years they might have 2 or 3 more segments. And that's where if you look at how chemical companies has done in last 5 years in India, right, it's not that there were no chemical companies, but the large chemical companies, the way they have been doing capex, they saw the opportunity, and the China plus one strategy, which is working great for these Chinese for these chemical companies today, and pharma any which has been a large sector which probably worked in tandem with China for last 20-30 years, but there are still lots of things which will happen and India will get, I think, a great share of global supply chain in the pharma space. And companies like Loras, I would say, are quite capable and will be ready to increase their market share and thereby their revenues over next 10-20 years by using that thesis.
Sushant, thanks very much for giving us a dipstick on the thinking process of 10-10. What you meant was 10 trillion economy size could be hit in the next 10 years, and many companies, of course, perhaps in this light, could grow sustainably and may grow their earnings in that proportion as well. Thank you very much for your time today. We'll get you back one of these days on a much longer discussion.